What's up, sons? It's Blind Red with Son of a Tech once again, and joining me today is Alex with Tactical Investing. He runs a YouTube channel as well as another project called Fraction Mining. And so we're going to get into it with him, talk about some crypto, talk about what he's been working on, and all of the links will be down in the description below as well in case you need to find him elsewhere. So welcome onto the channel, Alex. Thanks for coming on today.
Absolutely. Thanks so much for inviting me, son. Obviously, we met up in Austin. That was a fantastic time. Got to meet a few other creators. Got to meet quite a bit of your community. So that was really exciting. Got to talk crypto. You don't find that very often outside of just conferences. So it was really nice meeting you, at least in person, compared to simply just on the internet.
Yeah, it was great to have you guys out. That ended up being an awesome event. I definitely wasn't expecting it to be, I guess, as successful as it was. So it was pretty fun to have people come out. And then, I think we had Andy out there, which is cool. He came out and you got to talk to him. We also had Digital Spaceport out there. So hopefully, I think even Andy's going to come on the channel too. And I know Digital Spaceport's going to be on the channel or already has been on the channel, depending on when you guys watch this. So that got into chia mining, of course. Everybody trying to convince me to do that these days. So that was fun. I think that video title is literally like Digital Spaceport tries to convince me to mine chia full time. So.
Nice. Yeah, he's pretty gung-ho about his chia, huh?
Yeah, he's definitely very convincing too. And you're like, oh, maybe I should rethink this. And I'm like, hold on, you had to get 40 gigabit internet or like networking to like move all those plots and stuff. I'm like, man, this seems like a little out of my range for that networking gear there. But it is what it is. It sounds like it's profitable for what. Compared to a lot of other things for home miners and stuff, though. So it's an interesting.
The energy side is really where the kicker is, right? The energy consumption is extremely low. And if you do a DIY guide, depending on how you do chia farming per se, you can get some really good deals. I started, well, without going on a whole rant on chia, but I started mining chia before the token even got launched on exchanges.
Me too.
So this was like way back when, right? And so I had just like back when I could mine with, I had 120 terabytes back in that time. And like you could mine a chia or win a block solo mining within like 3 or 4 days. Now it's like a year. So it's crazy how much it's expanded. But yeah, I mean, like for people that are very energy conscious or high electric rates, chia is great. So.
Yeah, mining's an interesting thing to talk about too, from the perspective of, I know you're a Bitcoin guy, so maybe we can get into this a little bit, but the fundamentals of a lot of these other cryptos kind of is where I'm like, like from a business perspective, I'm like, this makes sense, but from a fundamentalist like Bitcoin sort of maxi point of view, like perspective, I'm like, well, this doesn't align with what my principles are within cryptocurrency. And like chia usually falls into that. One of the latest ones for GPU mining is Ironfish. But, you know, when I talk about Ironfish, I'm like, well, at the same time, it's not dissimilar from what Ethereum did. And we mined that for years, right? So I always find that discussion to be extremely interesting because it's like, well, here's how to mine it on the channel. At the same time, people are like, does that mean you like it or you're endorsing them or how much did they pay you? And you're like, no, I just tell you guys how to mine stuff because that's what I've been doing for the last 6 years or whatever on this channel. So,
I mean, like when Ironfish launched, right, it was the most profitable to mine via GPU, right? And one of the things when I talked about Ironfish, the one thing I didn't like was the Genesis block having 42 million tokens that was set aside for pretty much your Series A, Series B, all your initial investors, seed investors, right? So there may be things that you don't like about a project, but then from the monetary standpoint, does it make sense if you have bills to pay or you're meeting a financial goal? If I am making $1 per day with a GPU versus 10 cents per day with a GPU, do I forego my fundamentals, if you will, to look at the financial aspect? So I think it really just depends on each individual because some people will be like, there's no way I will there's people that will put their feet in the ground and say, I'm not going to support this, and I'm going to prove that I won't support it by keeping my farm on such and such. So they'll try to make a point about not moving their hash rate. And I think that's, you'll have people like that, and then other people that just chase the dollar. So I think it's just really what your approach is. And I've met people on both sides of the spectrum, and I don't think there's a right or a wrong. It's just a personal perspective.
Yeah, I mean, like if you're running as a business, I think you could say it's wrong to a certain extent because
Sure.
To stick to those fundamentals necessarily, you could mine something else more profitable and swap into something that you believe in. That's something I've said before, right? Where it's like, well, I'm going to go ahead and mine Ironfish, but I'm going to swap it to Bitcoin or whatever, right?
Right.
At the end of the day. So, but I agree with you. Like if you're like a home miner and you're in it for kind of that cypherpunk side of things or whatever, and you're just, throwing a rig on Raven coin or whatever it is. I think that's a popular one for cypherpunks or whatever. But, maybe that's your deal. Ironfish is very weird too, because it's supposed to be a privacy coin. It's a very odd duck. It's a privacy coin that has, these initial investors, as well as this whole other aspect of like KYC that they had, right? So, it's very odd. I'm not even sure what to think about it most of the time, but
yeah, I mean, there's a lot of things, and I think when you hear the term A16Z, typically as a venture capital firm getting initially involved, we've kind of seen the repercussions of A16Z, right? In a lot of instances with a lot of the projects they get involved in or are lead investors in, you can kind of see, even though there's lockup periods, there's everything to that end, a venture capital such as A16Z is only in it for the money, right? So when it comes to the fundamentals for an end user, that's not necessarily as an interest to them as their own dollar, right? So that was the frustrating part. I know a lot of people for the airdrop, I think it was the testnet airdrop or whatever, had a KYC for it, right? So it's counterintuitive and contradictive of a privacy coin to require users the KYC for any portion, right? Even though people are like, well, it was just only for the airdrop, but still, right? It's counterintuitive to the end goal, right? It's like if something to that end happened with Monero or another privacy coin that you had to reveal your identity to claim, right? That'd just be weird, right? No longer a private coin. So I do get, and when I did my video on Ironfish, is how controversial the project is from many aspects. So
yeah, and it's the oddest project I think I've seen launch in a while. But to be fair, extremely successful from the perspective of amount of hash rate that hit the network day one, the amount of support they got day one, was absolutely incredible. Like tons of pools available right off the snap. I mean, within the first week, you had an exchange availability for it. So it's pretty crazy. Like you don't normally see that sort of thing take place, right? It takes a while. The organic growth takes usually a lot longer, right? Like Caspa, for example, something that's like grassroots, I think took probably like a year before it hit an exchange or something like that.
Right.
Which is quite a long time, which Caspa just hit KuCoin today as well.
Right.
So that was a big one.
That. But I think, you're going to have people on both sides of the argument that like a launch like Caspa, because a launch like Caspa keeps it more to the small guys, right? If we're big guys, small guys, right? Caspa's organic growth and the smaller community growing around a valuable project, a project that brings utility, something new to this space, that is valuable. So then it's kind of like a new token that launches that's not on a lot of exchanges. It's not supported by a lot of softwares. It keeps it small so the early adopters get the most value, right?
Yeah.
And so in this instance, the early adopters for the likes of Ironfish or your venture capitalist, and I think that was probably why you saw it get listed on exchanges. They had $28 million to work with, right?
Mm-hmm.
So the amount of money they had compared to the amount of money Caspa and other grassroots projects had to raise from their own community to get listed on exchanges, vastly different, right? So, but I think there's going to be some that are like, well, I'd rather have Ironfish because as soon as it comes online, I've got all these options. Makes it easy for me versus like people having to figure out and get a little bit more on the technical side, trying to figure out how to do something with something like Caspa where it's not as popular and prevalent.
Yeah, and the mining strategies are completely different, but both at the same time can be extremely lucrative, right? You look at something like Caspa, you get in early on that, you mine a few million, and you sit on it until it does hit those, and then you got that kind of like crazy like snowball effect that you can make a lot of money off of, but you have a lot more risk, right? But the strategy for Ironfish though too, because you're talking about the lockups and stuff like that, and I think that's relevant from an investment standpoint, but from a mining standpoint, I don't know if it's relevant. And here's why: because if you're mining, you can just swap that out at that current price before the lockup comes up. So, you know, if I'm going to be mining Ironfish, I'll tell you, before that 1 year lockup comes, I'm probably dumping that Ironfish, right? Because just strategically as a miner, like I'm not going to lose all that money for power bills and stuff that I need to pay. So, yeah, they're completely different strategies, but I think both viable, right?
Right. Yeah.
So you have a YouTube channel, Tactical Investing. Tell us a little bit about that. What made you decide to start that?
Sure. So I started my YouTube channel about two and a half years ago. So it all started initially because this was back when I was in stocks. I did a lot of penny stocks back in the day. And this was back in right before COVID and all that happened. So it was like 2019, 2020, or 2020, I think is like when everything went kaput. Time has flown since then. But around that time, like everything had dropped like 50, 60, 70%. And I was like, wow, there's so much stuff on discount. So I started buying a bunch of, cruise lines, started buying stocks that just simply from recovery would do a 2, 3, 4x. And I was like, well, I should start talking about this. So I started talking about some of the different stocks, different companies I was taking a look into. I got into some of the pharmaceuticals. Pharmaceuticals are very high risk. And so that was kind of always my kind of approach is when you look at crypto specifically, it's high risk from an investment standpoint. So I kind of looked at that same correlation within the stocks and stock industry as far as what are some of the lucrative 10x opportunities in stocks, right? It wasn't typically going to be your Pepsi or your Apple unless you were maybe doing options or stuff like that. So I was looking at other things. And because at that point, I really didn't know what I wanted to talk about when it comes to crypto, because I've been in crypto since 2017, but I didn't know where my niche, if you will, was going to be. Even crypto is small, but even within crypto, you've got so many niches. So that's why for the time being, I was like, okay, I'll just talk about what I'm doing right now. And then I'll kind of see where I maybe fit inside of crypto. So I started on that, did a bunch of stock stuff. So my first 25,000 subscribers happened, I believe, within about 6 to 8 months. And after that, I was like, okay, I know what I want to get into. And I want to get into the mining industry and specifically stuff for at-home miners or things that, the likes of Helium, the likes of other projects that at that time were cheap to get involved in. They didn't take a lot of electricity and just overall crypto mining hardware. And that's when I pivoted around 25,000 subs. And from then just started talking about different crypto passive income opportunities is kind of the niche I went into. A lot of that, I would say about 75 to 80% is mining based because the truest form of passive income, at least in my opinion, comes from mining. When it comes to crypto. Yes, you have nodes, you have validators, you can stake, but there's nothing rewarding from putting a few dollars into, a staking protocol and getting 2%. That you don't have the hands-on approach, you don't have the ability to touch and feel, you're just put it up there, right?
Right.
So that was kind of where I pivoted, looked at the different mining approaches, was in helium very early, was in a lot of other projects that were mining focused very early. And kind of from there is where the channel grew. So that's kind of the whole last 2 years. Right now it's just kind of taking a pause because of a lot of my focus on my mining company, but overall that's still on a trajectory, just still focusing on more mining opportunities moving forward.
So let's talk a little bit about that. What is your mining company?
Yeah, so it's fraction mining. So it's built on the idea of breaking down the barriers to mining crypto. Now, specifically, there's three main aspects within fraction mining. Outside of the fractional aspect, the project itself, we have FM hosting that's going to be launching as pretty much a direct competition to Compass and Compass hosting. And then we also have our business to business partnership. So a client comes forward and says, "Hey, I've got $1 million. I want this amount of Bitcoin miners. I want this, that, or the other." Or we have prepackaged plans based on their investment strategy. Some altcoins are going to be a little bit higher risk. Mining Litecoin may not be as risky as mining Cadena, right? So depending on their approach and what they're looking to get in the end, we'll put those packages together, get them operational, and manage it all for them. So business to business is one thing. FM hosting, that's launching end of May, early June. For the time being, we're doing from a Web 5 concept of NFTs. So Web 5, you control the metadata within the NFT itself. So when you go and you claim and you get paid out, similar to like when you connect to a pool, right? You get your accrual of rewards, and then you can claim out to another wallet, and you actively have to do that. That was one of the things when we were working with our legal team, as far as from the Howey test, making sure that it was an active portion of an end user when it comes to going and claiming. Similar to like if you're mining Bitcoin, you go and you claim directly into your Bitcoin wallet. So the way we designed it with the membership NFTs is the membership NFTs would have the customization. So you would go and input your Bitcoin wallet address, your Litecoin address, your Cadena address within the membership NFT. And then we have our mining NFTs. So our initial launch was BTC. And so each BTC NFT is 7 terahash, and it has a retrospective wattage and a 6-cent energy rate. So what you have is just as if you were buying a fraction of like imagine if you had an at-home Bitcoin miner, right? Tokenized in ownership via an NFT. Mm-hmm. So it provided a means to individuals that may not have the ability to buy an ASIC, spend $2,000, which Compass, when we looked at Compass, because they were really the only competitor in this space that solved a solution for a lot of people. Compass sure gets you an 8-cent energy rate, gets you a 3-year contract, and it gets you still the cost of the miner itself, and you don't have to manage it. So it didn't provide a whole solution. So we were like, well, if someone lives in an apartment, they can't run the machine. You have an NFT to solve that with the tokenized hash rate. If their energy rate, they don't want to pay 8 cents with Compass, their NFT has a 6-cent energy rate. And then additionally, when it comes to the entry cost, you're looking at $300 instead of $2,000, right? So it's a fractionalized concept based on the ability for users to get into crypto mining without having to have the infrastructure aspect. Well, we'll have the infrastructure aspect through FM hosting as we do a beta launch, but that was the project itself from the NFTs. Now, the NFTs also have the ability, because of the way that the percentages are structured, about 24% of the rewards that go into a compounding aspect. So they get a set aside. So if miners break down, we replace the miners, and we're able to increase hash rates as more efficient miners come out down the road. So replace an old one, bring in a brand new one, and be able to increase the hash rate incrementally over time. So that was kind of the model that we designed. We minted out about 50% of our NFTs within the first 2 hours. and then the rest minted out, I believe, in about a week and a half after. So the next stage is going to be launching our Cadena NFTs. We haven't released the specs for those, but those are going to be like, if you look at a KD box, gold shell KD box, it's nowhere near the comparison. I mean, you're looking at a KD box being 5 terahash, 400 watts. You're looking at eons above the value of something from Gold Shell, not to mention their terrible customer service. But that in and of itself is kind of what we're looking at, is providing a solution for at-home miners that no longer have the ability to buy at-home miners from a profitability standpoint.
Okay. And so I think, like, obviously with that concept, because I've heard of this concept before, and I think I've even talked to you about it previously as well.
Sure.
There are still concerns for at-home miners that run across my mind. One is like uptime, right? What happens if there isn't availability for replacement parts and the miner's down, you're short on hash rate? What happens to the NFT holder at that point?
Yeah, so the uptime, guaranteed uptime that we have for the specific site is about 99% is what we're looking at. So we always also have additional ASICs that are always running. So even though we guarantee 7 terahash, we have a surplus of ASICs that if we do have to replace an ASIC, we have one there that we just simply switch the pool. So it's a very simple process. It's all done remotely through a operating software called Foreman. And so with Foreman, you're able to just do that switch in the course of 5 seconds. You're mining to a different pool, providing that guaranteed hash rate.
Yeah. And I'm familiar with Foreman, which I really haven't covered on this channel because obviously more GPU focused.
Sure.
But yeah, Foreman's been, a pretty much a staple, I think, in that game for a
It
while.
is.
So I know Hive OS was trying to get into that with this bear market hitting them. I'm not sure how well they're doing on that. I know they added gold shell support here recently, but that $2 a rig add on, and then they're like, yeah, add the gold shell boxes. I'm like, that makes it like not like it's not profitable, right?
Yeah.
Like, yeah, it's $2, but it's $2 on one of the boxes. I'm not a big fan of the boxes, anyways. I never have been, because they're very few and far between with how long of a life or shelf life they have for profitability. And by the time you get them, usually by the time the consumer gets them, it's usually not there anymore, right? Unfortunately. I mean, that's the same with all ASICs just by nature, right? You see the KA3 come out, you're looking at the profitability chart, you're like, oh, that looks great, $60 a day. Some YouTubers get them early and they make the videos on them, but then in reality, once that shipment hits your door, it's like, now it's like, what, $10 a day or something for a KA3? It's not great.
It really depends on the company too, right? So when the way Bitmain operates, having talked to one of the part owners of Bitmain, Bitmain has a very different approach to their operations and what their end goal is compared to other manufacturers like MicroBT. So once you even get to the manufacturer level and you kind of start understanding how they operate, you get to kind of play their games alongside of them. So that's one of the things we've kind of gotten to know a little bit more, getting more involved into the industry, because right now we're going to be running about 60 petahash worth of Bitcoin mining. And so once we continue expanding that, we'll probably be at about 100 petahash from my expectation, at least within the next 3 to 4 months. So you start to understand, testing the Antminer versus the What's miner, and you're like, okay. And then you strategize, even from a at-home miner, right? The KA3 launch, how all of that happened, how the pre-mine happens. If you understand all those concepts, you can make a lot more money once you understand how the manufacturer plays their games to play along with them.
Nice. So what are some examples of that? Do you have any?
Yeah. So when the L7, and a lot of this is around the more profitable miners. So when the L7 launched and the KA3 launched. Now, primarily focusing on the KA3. The KA3 was announced October, I think it was October 1st, or very early October, that they were going to be offering up for sale. So you had a bunch of people flood in, buy these KA3s, because as soon as you saw it listed on ASIC Miner Value, like you said, it was $60 a day. Everyone went crazy over it. Now, what happens is Bitmain goes, and when people pay and it mints out or sells out, if you will, in 10 seconds, and they always promote that. What Bitmain goes and does is they take all of those KA3s that you would have bought and they start mining with them. And they mine with them until they go and deliver. And that's why you will see constant delays on deliveries on brand new miners. So the KA3 was supposed to be in individuals' hands 1st of December. Then it was end of December. Then it was end of January.
Right.
And so when we acquired some of these KA3s through Bitmain, when we brought them online, because we were testing them and getting them ready for our Cadena launch, typically when you see the errors within a brand new miner, usually there's very little. We're talking about errors of excess of 1,000 errors within the first hour of mining, right? That's unheard of out of a brand new miner. And so when I was talking to one of the part owners of Bitmain, he kind of explained to me that this is how Bitmain operates. Bitmain will launch a miner, then take all those funds. Sometimes they'll use those funds to then go and manufacture all those miners, or they'll use that for the next batch of miners that they're going to launch. And what they'll do is all those KA3s everyone bought, they're going to go ahead and start mining with those. And then when you pay for them, that's why the prices are oftentimes so cheap, is you're actually, by the time it comes to your door, you're getting a refurbished miner. It's no longer brand new. They've mined for it for the last 3 months, and then they get it to your doorstep 3 months later after they've enjoyed the full fruits of their labor. And that's what happened with the L7 launch. A lot of people, if those that remember, the L7s were very much delayed because there was nothing else out there from the profitability standpoint to compete when it comes to Litecoin mining. And so that's why Bitmain delayed. By the time users ended up getting it, they got refurbished miners. They weren't brand new. So that's kind of an example of Bitmain's only money focused. That's their only focus, is how much money can Bitmain make. Now, having talked to high-level individuals over at WhatsMiner and MicroBT, their focus is on use case and utility for their ASICs. So for example, MicroBT owns a majority ownership in a company called HeatCore. And HeatCore has I don't know where the exact location, but HeatCore has almost like servers. They're all hydro-cooled. And so they have these servers inside of a mall. So Bitcoin miners, I think they're the M33 or the M53. They're just black racks. They look like almost like a little data center, if you will, right?
Yeah, they're server racks, and then they have basically like those little 1Us, and they have aluminum plating on them, and then they pump in. Those are all aluminum, whatever, cold plates that pump water through them. Yeah.
Yep. And so what WhatsMiner does is they focused on the utility aspect, and they're like, well, we want to take these Bitcoin miners, and with their WhatsMiners, they heat the entire mall through the concept of Bitcoin mining, and they bring down the overall energy consumption of the mall itself because they can heat the entire mall's water through their operation. So WhatsMiner has a very different approach to how they want to be known in the mining industry as a manufacturer. So I think it's interesting. And if you get into playing Bitmain's games, that's why you're seeing all the L7s go on ridiculous discounts. I think by the end of this year, we'll see an L9. And by the point, you're going to have people that are going to go all crazy, buy a bunch of these L7s you can get them for $4,500 landed, which 2 months ago, they were 8,000, 9,000, right? So when you get to kind of know some of these games, there's a timing aspect. If you waited a month, you'd have saved yourself $4,000, right? So just kind of being in the know, keeping in the loop of stuff
and
like
does that. So for like that strategy, just like an idea, the timing there is to buy when they announce the L9 knowing that the L9 is not going to hit mining until they've sold out a batch, right? And it won't hit a second batch until they've mined on it for a little while. But then you also have a better idea of what that profitability is going to be like too, right?
Exactly. So it's
They
not always
yeah.
the case.
I hate the ASIC game so much.
It's really annoying because in the end, you'll always lose
Yeah.
as an end user. But there's ways to lose less, if you will, because there's nothing more upsetting to someone that was like, okay, I think I'm gonna go with Litecoin mining. I've saved up enough money. I've got my $8,000. They spend $8,000, and then a week later, that same miner is now being sold for $4,000 from the same website they just paid double for, right? So having kind of looking at at it instead of just sending money and getting a miner, there's definitely an understanding that you kind of have to have with these manufacturers.
Do you think that do you think that more competition within ASIC manufacturing kind of starts to resolve this and shake it out a bit? Or do you think most ASIC manufacturers will follow a similar strategy?
Um, so I think there's a couple of ways I think to answer this. So I think What's Miner is definitely within the next 2 years. What's Miner is going to be a bigger brand. What's Miner is becoming more and more popular, and we're having from fraction mining conversations with What's Miner to bring them and Heatcore specifically to bring them into the U.S. because a lot of the issues Heatcore has is the lead times is about 6 weeks. So we're looking to be able to cut down those lead times because if when you go and buy a miner, you expect delivery within a few days, oftentimes, or no more than a week or two, at most, right? If it's coming directly from China. But to have a 6 week lead time, a lot can happen. So I think what we're going to see is What's Miner is going to be a bigger brand, and that's going to bring down prices a little bit from a competition standpoint. The problem that you have, and I've seen companies try to get into this, is companies aren't going to be able to compete, I don't think, in my opinion, on the Bitcoin level, neck and neck to Bitmain or What's Miner. They already kind of control. It's kind of like another phone company trying to launch a competition to the iPhone or to the Samsung, right? But I think there's going to be companies that are going to find their niches. And as long as they continue finding niches, they're going to be able to survive. Gold Shell did this for a little while when they did at-home miners. The problem is
Right.
the industry's come so far that Gold Shell is pretty much a no-name. At least in my opinion, I think there's Gold Shell struggling financially in a lot of ways. It's just my opinion, and I think Gold Shell and possibly could be a forgotten name before we know it, unless companies adapt. And so, seeing something, for example, very controversial, Ice River, right? Ice River has gained a lot of notoriety, a lot of controversy, a lot of unknowns, but they've made a mark in the space because they went after something that no one else had. They found their niche of Caspa, right? So that's really the only way is these altcoin miners is really the only way that I think any mining
Break into it. Yeah.
exactly. Because when you look at how many chips some of these manufacturers that Bitmain orders, that MicroBT orders, it is ridiculous. So when these manufacturers go and fulfill these orders, unless you're coming with 1 million or 2 million chips, they're not even looking at you. So unless you have a situation like Intel, even Intel dropped out of the game.
Yep.
So you can see how difficult it's to get into it. And so I don't think I know of a couple of companies trying to get into it, a few being successful. But outside of just getting a miner, there's so much more outside of that, right? How are you going to distribute it? How are you going to provide warranty and repairs? Are there repair centers? Are there people educated on how to repair miners? There's so much that goes into it. This is a conversation I was having with Epic Blockchain, who's one of the manufacturers using Intel chips up in Canada. They did some partnerships and deals with Argo blockchain and another publicly traded company. But even stuff like that is being cumbersome as far as being able to provide not only just a miner, but everything else that comes with it.
Right. And I do think from a repair standpoint and all that, the industry needs to evolve. I mean, it's nowhere near what you see on like the data center side of things, right? Dell or HP, where you get 4 hour SLA, that sort of stuff, right? Where you got a technician there somewhere that can repair anything within 4 hours, right? Or replace it if it can't be repaired. And I think that that will have to be adopted at some point for a lot of these, at least from the Bitcoin mining side of things, right?
Yeah.
As far as getting into it, or into ASIC manufacturing, I think you're correct. It's going to be the smaller coins. What's interesting there is that we have a lot of smaller coins that are planning on or susceptible to being mined with ASICs now. As opposed to previous cycles, that wasn't necessarily the case. A majority of the coins that were coming out, like last bear market, right, were ASIC resistant, right? That was kind of the thing. You had like the Ergos, you had like the, obviously Ravencoin was kind of 2017, 2018. Was it January 2018, something like that? But now we're seeing, Caspa with plans to move there. We're seeing Nexa with plans to move to ASICs. And you see Blake 3 being out there with Ironfish, which is completely not even close to being ASIC resistant, right? So there's a shift in the industry as a whole, moving towards like these kind of like altcoin ASICs. But then I have the question of like, how many of these companies or coins specifically, are making this as a financial play in the long run, right? You have to question their motives. If the coin is coming out and it's like obviously within the roadmap going to go move to ASICs, how many of those guys that are devs for that coin are also working on the ASICs to launch that? And then what kind of like ASIC rug pulls do you have in the works, right? We see the ASIC or the FPGA rug pulls, for example, from developers for bit streams happen all the time. Is that something we're going to start seeing more often in the ASIC industry, right? I'm kind of wondering, at least.
I don't know. I think there's a lot that happens behind the scenes, right? I think, even when I was watching an interview with the Cadena devs talking about the launch of the KA3, and they were super excited for it. They were eagerly waiting for something like that to happen. Cadena's had its controversies before in the past, but you have to think about from an aspect of when you look originally at Bitmain was only a Bitcoin and they were only a Litecoin mining company for a long time. They were only Bitcoin. They launched Litecoin, and Bitmain was known for Bitcoin and Litecoin. Within the last 6 to 8 months, and Dash, and within the last 6 to 8 months, they've launched Nervos. They've launched so many others, Cadena, and outside of what their normal industry is, and they're money makers, if you will. And so I'm wondering, kind of like you mentioned, from devs possibly working with these manufacturers in cahoots, if you will, and saying, hey, if we bring ASICs to the game, how can we both benefit financially? And I think that could also happen in comparison, because the power of ASICs will always supersede the power of GPUs. And so when it comes to a money aspect, developers and manufacturers are going to definitely want to make a lot more money off of ASICs, and they know they're going to make a lot more money off of ASICs compared to what they're going to make from the GPU community. And I think that's a negative, because it kind of shuns the GPU mining community that in many ways was always a first step in the process, right? If you go in the early days of even Bitcoin mining, right? Bitcoin mining, the first Bitcoin, if you will, wasn't mined via ASIC. So you look at stuff like that, oftentimes everything develops over the course of time, but it kind of forgets the early adopters. And that's a frustrating aspect to a lot of GPU miners.
Well, and I think you also have that, I mean, it's that barrier to entry. I think you do hurt adoption to a certain extent. If you skip the step, definitely.
Right.
And then even if the end goal is kind of moving into ASICs, I think you do risk losing adoption, right? You take a
Sure.
look at something like Ethereum and you look at like pre-merge and post-merge activity on the network, and it's night and day, right?
Yeah.
It's like if you can argue however you want, but you could even just say, go watch the Ethereum Core Dev live streams. And now, compared to how many people were watching those live pre-merge, right? And
Sure.
that's night and day, right? Hundreds to thousands now are tens to 20s, right? Like that's a big shift when you're talking about adoption. So I think you can hurt adoption there if you skip that step. Just because you don't have anybody utilizing the network at that point, right? You have a couple large ASIC farms that are utilizing it. There's no
Right.
incentive for those large farms to participate within the network. So I think there's a fine balance there. And I think if you move a little too fast, something that I've definitely been watching on the Caspa side of things is like this is moving very fast and quickly towards ASICs. And how much is that going to
Mhm.
drop adoption down on it, right? Um,
Right.
Now, of course, I had the interview with Shy. They don't think that it'll hurt adoption at all. It
Mhm.
looks like, obviously with the KuCoin adoption there, we're seeing a bunch of new wallets created. Obviously, that's just par for the course for any new
Sure.
exchange launch. But we are also still at the same time seeing a larger accumulation in fewer amounts of wallets, right? Just due to FPGAs and ASICs on the market.
Right.
So it causes this kind of weird selling pressure that almost pauses that run, right? Like that
Right.
Casper run's kind of like on hold right now. And I
Mhm.
think some of that is due to a little bit of that FPGA dump, which it's impressive it survived that, I think, to its credit, right? So um, when I saw like that 100 million coming out of that miner's wallet, I was like,
Mhm.
oh man,
Right.
this is going to
Yeah.
hurt a little bit, but it didn't hurt that bad, luckily. So,
Right. And like to your point, right? You have less people accumulating more, right? And that decentivizes everyone else because that takes from everyone else, right?
yeah.
Is for every one person that turns on 100 gigahash versus 100 people that have a gigahash each, right? Um, if you're taking all that from them, everything from theirs goes down, and it's not as incentivized to have 100 people versus one person, right? So
Right.
there definitely is a power in numbers. And when you have, this is kind of one of the things with Cadena mining in the KA3, right? The KA3 was eons above anything else, right? Gold Channel had the KD max, I think, was the 40.2 terahash at, I don't remember the wattage, but the comparison of 166 terahash at 3154 was not even close. You got 4 times the terahash for less
Well,
power consumption.
the IB Link BMK3
Okay,
was pretty
yeah,
close when you got the low power mode and efficiency, at least.
right,
Um,
right.
which I think was probably a smarter play if you were going to be Cadena mining, because you could also buy them before the KA3
Right.
launched.
Yeah.
So
So I mean, like, but even to that end, right? It took all the KD boxes all completely offline
mhm.
from a profitability standpoint, right?
Yeah,
And in a sense, that's what happens to GPU miners once FPGAs come out and ASICs for those cryptos that they were mining before. Is now you can't be an at-home miner profitably, and you're decentivized from doing it, right?
right.
I think there's a very valid point there.
Which also just means there's less transaction demand on the network, right?
Yeah.
Which is something that I think a lot of people fail to account for, especially the Moon Boys for any given project, whether it be Cadena or Casper or whatever it may be. I think that gets. It's like everybody wants to come to the defense and say, no, this is going to be better because we're going to get more security. And you're like, yeah, but you're trading security for participation is what you're doing at the end of the
Right.
day. Ideally, you want to have that balanced out in some form or fashion and timed out in a manner. But then we just go back to the whole question about does this. Hey everyone, sorry about that. We ended up having some technical difficulties. At the end of that, I was talking about basically trading participation for security when it comes to moving from GPU mining to ASIC mining. Get your final thoughts on that, Alex, and then kind of close it out here.
I mean, I think you can have that kind of similar mindset argument to Ethereum moving from proof of work to proof of stake, right? The active participation within the network from the security aspect definitely went down. At least in my opinion, when you look at people actively involved and interested in keeping their mining operations, the whole argument between proof of work and proof of stake, right? Which one's more secure? I would say most people would say proof of work is more secure than the likes of proof of stake. But then you're also trading something to have the thing that you value, right? Everyone has something else that they value. And I don't think any project is always going to get it 100%. I think Caspa, if we're looking just at Caspa, I think Caspa's done a very good job thus far, right? You're still very early in the roadmap, but I think, you know, there's one of the most underrated values of any project is the community, because you can't really put a value or a dollar sign on a community because it is invaluable. And because the moment you lose your community, you could have the best project in the world, but have no adoption of that project, and your project's worthless, right? Bitcoin could have been Bitcoin is a solution for a lot of problems, but imagine Bitcoin with zero adoption from today. The Bitcoin white paper would just be some random white paper on the internet, right? Without adoption. So I think you have to tread a very fine line between growing and taking your project such as Caspa, or taking Caspa to the next level, and threading that properly with keeping your community still there. And I don't think anyone in the end will do it perfectly. I think some projects will do it better than others. And I think Caspa is doing a pretty good job.
Yeah, Caspa is interesting because I think it's what makes it unique is what's making it more viable to build more nodes in solo mine, right? It's that the blocks per second. I think we'll see an even greater advantage to that once we see the Rust rewrite happen. It'll be interesting to see what happens with the rest of the projects too. So where can people find you? And I know you got fraction mining and tactical investing, obviously on Twitter, guys. You can check out below his video there and follow him on Twitter. Where else can people find you?
Yeah, primarily on YouTube and Twitter. So you can find also fractionmining.com if you want to check out the project, learn a little bit more. Obviously, we're minted out, so it's only available on secondary markets, which last I checked, there weren't any BTC NFTs for sale. So all of that is being hodled by everyone currently. Definitely keep in touch as far as on my social, on the Fraction Mining Twitters, my Twitter, as far as our future launches and as we expand. But outside of that, you can also find me in the Fraction Mining Discord, which will be linked on the Fraction Mining website. So either one of those two, you'll be able to find me.
Awesome. And I'll have to have you back on to talk about infrastructure too, because obviously with the minting of that, you guys are building out farms and all of that. So I'd like to have you back on if you're interested. But for today, we're going to call it a day. Make sure you guys check the description, and I will see you next Tuesday. Today's sponsor is myself. I recently launched a crypto mining e-course at sonofatech.com, and it includes 9 steps to cover when you decide to start your crypto mining journey. This is specifically pertaining to 2023 crypto mining profits and taking advantage of the down market to achieve skyrocketing growth as we move into the next halving of Bitcoin. You'll learn buying mining equipment in a bear market, using outside investment to speculative mine, begin mining once profit is established, sell mine crypto to pay for electricity, hold and prep for the bull run, sell at the top of the bull market, sell mining equipment at the top of the bull market, and begin investing in land and power so that you can bring in outside investors to utilize excess resources. Thanks everybody for your support, and I hope you enjoy the course. Let me know what you think of it in the comment section below.